Welcome back. Now to our next conversation. It's that time again when companies release their scorecards. We see strong earning performance of a number of 2021 company results that released on Friday. Now to drill down on these numbers, we have Ayodeji Ebo, Head Retail Investment, Chapel Hill, Denham. Great to have you on the program. Good morning.
Good morning, Ladi. Thanks for having me.
Yeah, so we've seen a flurry of full year 2021 company results, published on the NGX. Can we say the compliance level has increased?
Okay, good question. I think the first thing we need to note is that I think last year or 2 years ago, there was a new rule that was introduced that gave companies the option to either publish their unaudited account 30 days after the full year and publish the audited 90 days after the full year, or you publish your audited account 60 days after the full year. So what we've been seeing, a lot of the accounts that have been published so far are companies trying to meet up with the 30 days window for the unaudited accounts, which we also call management accounts. And in terms of the reliance level 2 will not be as significant as the audited account. While we don't expect any significant variation from what has been published, that's the unaudited account that has been published compared to the final audited account that will be released within the next 60 days for those that are published within these 30 days. So we believe that when you see the compliance level, it's really very positive for the market. It means that it reduces the time, at least by, let's say by a month, from when last we've seen the third quarter results. So it helps investors to make informed decisions. And by and large, like you rightly mentioned, it's been a mixed bag. We've seen a lot of very surprising, very positive earnings across different sectors.
Yeah, quite impressive. Going specifically now, the banking sector, what's the trend that, characterized the results in these sectors? Do you expect this trend to actually, hold across the sector?
Okay, thank you. The banking sector, which accounts for close to 40 or 50% of total activity in the equities market, based on its liquidity, and starting with those that I think published very positive results because it's mixed. We saw some that were disappointing too. So starting with EcoBank Transnational, we saw the top line improving by about 13% year on year to about 952 billion. And you also, when you look at the bottom line, which is the PAT, profit after tax, that surged by a whopping 324% year on year to about 143 billion. We can see that impact. I think year to date, the share price have rallied by close to 30 to 40%. And looking critically at that result, while we see the result improve year on year across both interest expense and also the fees and commission. We also note that last year there was a goodwill impairment, which is about 62 billion that was provided. That weighed down the PAT of the company last year, and that is responsible for that major boost that we can see this year. Speaking to Fidelity Bank, we can see that their gross earnings too was up, I think by about 20% to about 250 billion naira. And the PAT for Fidelity, I think on a year-on-year basis, increased by about 43% to about 38 billion. We can also see investors are also trying to take position in those stocks. Sterling Bank was a bit fair in terms of the growth was still positive. Gross earnings was up by about 8% to about 149 billion, while PAT was up by about 15% to about 13 billion. So by and large, those are the positive ones. I'm now looking at, I think, the negative, those that were not, if I put it this way, not impressive. Stanbic Bank also published, we saw the gross earnings decline by about 12% year on year to about 205 billion, while PAT declined by about 31 billion year on year to about 56 billion. We saw this is not a surprise because the Q3 earnings too was also not positive, and we believe that there's in terms of the non-interest income revenue, the bank will need to work on that. That's part of what has been stabilizing the earnings of the bank. And lastly, Unity Bank declared a loss. There was a major provisions on impairments on the financial assets that weighed down on the bank. So by and large, that's it for the banks. We have a very positive results, and
Yeah.
those were also very underwhelming
Do you
results.
think investors will be forgiving, the stocks of those ones that didn't perform well?
For investors are rational. So what you would see is that investors will move from stocks that that published disappointing results. They move for those that have potential. That's why I highlighted ETI. It was a major surprise, and we could see investors trying to position into the company because on a EPS basis, that increased significantly to about, I think, 43 naira, if I'm not mixing that up. So investors will definitely gravitate where there's value.
Value, exactly. Well, let's look at the oil and gas space now. Let me have your thoughts on Total Energy. Quite impressive results there.
Yes, very interesting result. And when you look at the top line, that also increased by about 67%. That's to about 341 billion. And the PAT increased by about 700% to about 16.7 billion. And one of the major reasons for that, try to look at the breakdown. So you would discover that there's an improvement in their sales to corporates. So it means that their e-card is really helping. And we may also want to say last year a lot of companies were also not operating, and that also impacted on the sales. Their distribution to the network, which is the filling stations, that I think was accounts for about 57% of their total revenue. And while aviation has continued to remain with I think about 10%. So I think by and large the company, we all know that has transformed from exploration to energy. So their focus is also trying to see how they want to take advantage of the renewable energy space, which we feel that there's also a lot of opportunities there. So the future we feel is also bright for this company. Now we'll see investors continue to take position ahead in this company.
All right. On the consumer goods counter now, we also noticed strong, positive growth in their results. What's responsible for that? Can we say the economy is improving?
Yeah, I think we can say the economy is improving because in terms of business activity, has also improved. If we look at where we're coming from, how COVID has impacted activities, people working from home, and also not working on full scale basis. So we can see that driving the earnings of the company. So the two top companies within that space, Boa Food that just got listed, with the revenue improved by about 73% to about 333 billion, while PAT improved by about 99%, very impressive, to about 75 billion. In terms of margin, gross margin was around 46% and PAT margin about 35%. Then when you now compare that to flour mills, our flour mills, yes, was very impressive. Looking at it, top line increased by about 48%. But you also look at the bottom line, that increased just by about 9%. Because I know investors have been trying to juxtapose in terms of in terms of the value. So when you look at their share price, the Boa Food is around, I think, 64 naira, and I think flour mills still around 20 or 25 naira. So one thing that that stood out here is in terms of the margin. So you see flour mills cost of sales accounts for about 90% of total revenue. So the company still needs to work on its efficiency, because at the end of the day, for equity holders, is what is left that they're able to pay out as part of it as dividend. So we feel that if this trend persists, we would see more interest in boa food compared to flour mills, given the ability to pay to compensate investors or to pay out good dividend.
All right, now to the agriculture space. I see Presco published very impressive results there. Tell me about that one.
Okay, thanks. The overall, the sector has been very positive, and I feel part of what is responsible for that is as a result of the FX liquidity, we've seen the demand internally for that's domestic demand for their product, which serves as input to a lot of companies. So Presco increased on a year-on-year basis revenue by 104% to about 47 billion, and PAT improved by about 140% to about 24 billion. And you look at Okomu Oil also increased the revenue by about 57% to about 37 billion. And the PAT increased significantly by 100% to about 14 billion. So looking at, I think, Presco, you would see that you would discover that there's significant improvement in also their exports. Looking at the total revenue from their export grew from about 1 billion last year to about 5 billion. So when you look at the exchange rate gains that they would also have as a result of the adjustments and that we had last year, that's also very positive for them. So I think that sector, it's the FX environment, it's positioning it for a lot of interest, because rather than companies trying to queue for FX and trying to import, I think it's easier for them to just sign off-take agreement with some of these companies. And it further portrays that sector, if it's properly run, there's a lot of potential, because when you look at their margin, it's really above 50%, very impressive within that space, notwithstanding a lot of the crowdfunding agri space that have really disappointed investors in the past 1 or 2 years.
All right, another big one is the telecoms. See, MTN had impressive results and actually declared dividends. Also, chatter about Google investing in Airtel India.
Okay, thanks. The sector which we expect would continue to perform positively. When you check the average revenue per user for customers, that's looking at MTN, that also improved to about 4,000 naira from about 1,000, maybe 380 naira. So it means subscribers are spending more on data, whether data or on calls rather. So we believe that the companies within that space are really positioned to benefit from that. Their data revenue has continued to improve. When you look at for MTN, revenue improved by, I think, about 48% to about 800 and about 23% rather, to about 1.6 trillion naira in terms of revenue. And PAT improved about 45% to about 298 billion. So we know that MTN did a public offer last year, and we investors, it provides a bit of or it provides strong confidence for investors that have positioned, though the allotment has not been concluded, but that provides a lot of comfort for investors that they have purchased or they have invested in value stocks. And you mentioned Airtel Africa that joined the FTSE 100. I think it's also positive. It's a bit of visibility for the company, and we'll begin to also see demand. When you look at it in terms of the interest that we have continued to see, because of its fungibility, we'll see a lot of investors trying to use that to also move funds out of the country. So you buy you buy on the on the NGX exchange, and you sell on the London Stock Exchange. So we believe that would will continue to see that. And in terms of expectation for their revenue, their end of year is not December, but we believe that that will also be very positive. So by and large, it's been an interesting period within the equities market, and we believe that investors will react positively to this because we have more positive results. Despite that, it's a volatile year, pre-election year, but we believe that this first quarter will be strong. But investors that are short-term in nature should try to exit or try to reduce the exposure to the market because the expectation will reduce as we go into the second quarter. But if you have that long-term perspective in the market, it still presents significant opportunities. While we expect that within the next 1-2 years, when election is over, we understand policies, we believe that some of these companies will be able to deliver more impressive results.
All right. Well, we'll be watching as the results keep pouring. Thank you so much, Mr. Ayodele, Head Retail Investment at Chapel Hill, Dedham. Thank you for your time on the show.
Always my pleasure. Thanks for having me.